Hello everyone, my name is Sunday again, and I welcome you to my channel. Welcome you to Against FX. That is my YouTube name. And how are we progressing as regards to the training? All right. We already have enough materials for you guys to consume. All you need to do is go to YouTube just like this, launch your YouTube app. Then what you need to do is from here, all right, where you see the search bar, just type Against FX, all right? Just type Against FX. Once you click it, it will open. So you immediately, you will see some of my videos. All I need to do is click on this. Click on this. As you click on it, then you will see subscribe. All right. You will see subscribe. Once you open it, you will see subscribe button. You click on it. Then after you have subscribed, what you need to do is go to playlist. Like I told you guys, I created a 3 playlist here. So this one here is beginners free course. This is financial flow. This is market moves. So you go to, as a beginner, just go to this beginners free course. All right, we already have 7 videos intact, enough here for you to consume, and gradually you are matching or taking that step to become a forex trader. So we, as a professional trader, we started just like that. So that is how it is, guys. So that being said, don't forget to subscribe. Then after you have done that, you activate the bell sign so that as soon as I drop any video, you'll be the first to be notified. And more also, you need to share this video, because if you have the opportunity to come across this channel, there are other people that are still looking for this kind of opportunity, because to pay for a course is expensive. All right, it's expensive. Even me, I do charge. So, but this period, I just decided, because I know most people, so many people, they want to be part of this. They want to become a trader, just that they don't have the capital, as in money, to even pay for their cost, not to talk of capital to even start trading. But first thing first, you need to acquire the skill. But you should also know that this is not get rich quick scheme. You need to first of all acquire the skill, then you practice what you have learned, then gradually as you demo trade, as in trading on demo account, you are practicing your strategy and what you have learned. Before you know it, you will just start trading. So first thing first, you need to know the basics. You need to know the basics. You need to build a foundation. All right. So I am taking you through everything that you need to know as far as trading is concerned. There's one thing I want you guys to know: trading is not easy. All right. As you are going through this process, just know that you are just gradually shaping yourself into a financial world. Yes. Once you know what you are doing as a trader, forget about it. That's why we always tell people, focus on the process, not the goal. The process. You must learn this thing first, acquire the skill. Then the money aspect will just come, will just be a byproduct. It will only take time. All right? Because you need to master it. All right? You need to master it. It's not a child's play. You need to master it. All right? So that is how it is. So I want to be seeing your comments as you go through this process. Any video you have watched, I want to see your comment. Drop it at the comment section, what you have learned and the things you're having challenges or difficulties with, so that if it will warrant me making another video to call it part of that video, all right, just tell me this topic, I'm having issue with it, then I can use that, create time to make another video, all right, to really clarify the issues you may be having and all that. So I told you guys throughout this month is going to be a crash course. I'm going to every day, I will teach a different topic. It's a promise, and I have already decided and I've stamped it, all right? Like me, I just came back from work, and here am I making this video because of what I have promised, all right? So today, we are, like I told you guys, if you have any comment, any challenge, please leave it, drop it at the comment section. Don't fail to do that. Drop it at the comment section. Once you have watched my video, I need you to drop a comment. All right, if you have understood everything, let me know that, okay, you have understood everything. Then you now move to another video. If you are getting something, if something is little, that is not clear for you, that you want me to throw more light, please still indicate at the comment section. And apart from that, share my videos so that others can see it. All right, that being said, let us begin. Today's topic is going to be wow, because these are the things you need. All right, these are the instrument you need for you to be able to, you want to place a trade, whether you want to buy or you want to sell, that you are just sitting at home on your system, you are giving your broker an instruction, all right? Telling your broker you want to do this on your system. You don't need to say anything. Once you make a click, you already know, your broker knows what you want to do, all right? And that instruction will be carried out immediately without any delay. So that is how it works. All right, today the topic is types of market orders and how to apply them. All right, should I say how to apply them or when to apply them? All right, let's choose the word when to apply them. Let's choose the word when to apply them. All right, when to apply them. So we have types of market orders, and I'll also let you guys know at what point should you use any one of these. We have instant execution. All right, instant execution. All right, all these things are order. All right, instant execution. All right, we have stop loss order. We have take profit order. We have a buy stop order. We have a sell stop order. We have a buy limit order. And we have a sell limit order. So all these are what you are going to be doing. Either you want to buy now, or you want to buy later, or you want to sell now, or you want to sell later. All right. So all these things, once you choose one, all right, anyone you activate, your broker already know what you want to do. All right. So first thing first, let's take instant execution. All right. When we say instant execution, we are simply saying you want to buy at market price. All right. You want to buy at market price. Guys, anytime you are watching my video, please get a paper, get a note and a pen. Get a pen and a note. It's not something you should be, maybe you just say, let me just put this, let me just watch this video and as if you are watching African Magic. No. You must have a pen and a paper. All right? You are studying. Create that time. It's not a long video. All right? If I want to make I can make 3 hours video. All right? This thing I'm using here, the Zoom I'm using, I'm paying for it. You are not the one paying, I'm the one paying for it. So I've already done the subscription. So I can record for like 3-4 hours. So I don't want to make that kind of a video. So most people will complain it's too long and they don't have that time. So that is why I'm breaking it down, topic by topic, all right? So instant execution order is like you telling your broker, I want to buy this asset at this price, at market price. That is an instant execution. You just open your chart, and you see, for example, you open your chart and you see that, let's say, for example, now that I just opened this chart now, all right, I'm waiting for price to get to this place because I've already set my alarm, all right? Once price push up to this level now, and body breaks it, I will know that this price is ready to push to the upside. Look at what I've just taught you people on the previous video. Price created a high, giving us a price here, then it retraces. What happens? It now push again, giving us another price, high price. It retraces again. Now, what do you expect, guys? Drop it at the comment section so that I will know that you guys should know what you are doing. All right? I will now know that, okay, what you have learned so far, yes, you have learned something. All right, now the price has retraced up to this point, and you can now see that it's looking as if this point here is holding. The support is holding, that buyers are here. So what do you expect? Now that buyers are here, what do you expect? All right, we should be anticipating that price will rise. And when price is rising, it should take this high and give us a new high. Otherwise, if it fails to go high, that means you will have to start to come down. And before you start coming down, there must be what we call change of character or market shift before it comes down. So I don't want to go into that. So now, if I look, I said instant execution, I don't want us to deviate. All right. So now this is a chart. You just open your chart and you discover that, oh, this price is preparing to rise. What do you need to do? You just click buy. Once you click buy, all right, like this now where my cursor, once you click buy, that means this is the price, the current price now. You want to get into the market, you want to get involved in the market at market price. That is instant execution. If you don't understand the way I'm teaching you guys, I don't think that means trading is not for you. Or maybe you lack that sense of understanding or understanding things. As simple as that. Instant execution, all right, is a market order. How do you use it? You are telling your broker, it's an instruction given to your broker. Because I told you guys, all these orders are instruction to your broker. Telling your broker, this is what you want to do. So it now depends on the one you activate. Now we are on 1.1, that is instant execution. Instant execution is an order. Once you click, you open your chart, you now discover that the price, it went like this, created a high, pull back, this is a support level. And you are now sure that the price is supposed to give you a new high based on what you are saying. All you need to do is you click buy. Once you click buy, because the price is going high, you just click buy. That is an instant execution. You just place instant entry. You enter the market without saying, I want to wait, or without any delay. That is an instant execution. Let's say, for example, you go to market. You go to any shop or supermarket. All right? And maybe they will say before 7 p.m. or at 7 p.m., all right, there will be a discount price for a particular product. Some people might just be waiting, all right, for that time to come. But you don't even have that time. You just know that, okay, since this product is available, let me just take it. You enter, you pay, you pick it and pay. That is just an example of instant execution. This price of this asset, I'm okay with it. Take. As you activate it, as you give that instruction, you click buy, your buyer knows that you want to buy at this present price. That is instant execution. Well, all right. Then we have what we call stop loss order. Now, the stop loss order is an order given to your broker, all right, to protect your capital. You use stop loss order to protect your capital. All right. Now, how do you do that? Now that you have placed an instant execution, will you just leave your trade like that? No. You have placed instant execution. Now, this is a buy tool. All right. Let's say your instant execution, you want to buy at this price. All right. You want to buy at this price. You are buying at this very price. All right. You are buying at this very price. Now, what price is this one now? 1.17126. You want to buy the market, buy an asset at this amount. You click buy. That is an instant execution. Will you just close your computer and go and sleep? No. What happens if sellers now decided to push the price back down? You have anticipated that the price will be going up. But sellers, after I just move a little, maybe 1 or 2 pips, all right? When you hear the word pips, that is price interest point. I will talk about that. That is the movement of price. All right? Now, what happens if after 2-3 pips, sellers came in and now started pushing the price? Instead of price to go up, price now got to a stop and now started coming down. What happened? As it's coming down, you are making loss. You'll be running at loss. You'll be running at loss. All right? For that not to happen, as you enter, you tell your broker, okay, should this trade go against me, take me out of the market once it gets to this point. Are we clear on that? Once it gets to this point, let's say it's going against me, but take me out of the market once the price, instead of going up, it turns and started coming down. Once you get here, take me out of the market. Do you understand? Take me out of the market. Once he moves 16 pips against me, take me out of the market. Let me just, and it's a loss, but this is a way to protect your capital. You minimize or you guide against your loss or losses. Instead of, if you did not use stop loss, what will happen? As the trade is going backward against you, that is how it's going to be draining your capital until, if you are not there to get out from that trade by yourself, to instantly cut the trade and take your loss or losses, it will continue to drain your capital until your account will now enter zero. Or as it's going against you, it will now get to another support level where the price will now hold, then the price will now turn from there. But who knows how much you have in your account? Before it gets to that support level, maybe your account, if you don't know how to apply proper risk management, then your account will be zero. All right? Even before your account gets to zero, you now start seeing margin call. All right? Margin call. All those things I will teach you guys. All right? You now start seeing margin call. Your broker will now be calling you automatically. Once your capital goes below a certain level, your broker will start calling you automatically, because you need to put in money, because the money you have is no longer enough for you to be on that trade. And if you don't respond, it will now, once it gets to a level, it triggers and your trade will go off, and you have already made huge loss. So stop loss, don't play with stop loss order. As soon as you enter the market, the next thing you need to do is to activate a stop loss order. Once you activate a stop loss order, anywhere you put the stop loss order, as soon as price gets there, if the price is going against you, then as soon as you get to this level, it will trigger it and your broker will take you out of the trade. Even if you are not there, even if your system is shut down. But once you enter the trade, put your stop loss order, your capital is protected. Because you now say, okay, the room you gave, if it's 15 pips, in this case now it's 16 pips, okay. The 16 pips, it has a price. You have accepted before you even take the trade. You know where your entry point should be. You should know where your stop loss point should be. So once you have identified that point, then you place another entry, that is instant execution. The next thing you need to do is to put your stop loss. That stop loss, what does it do? To protect your capital. It's an instruction to your broker, letting your broker know that as soon as price goes against me and it gets to this level, take me out of the trade. As simple as that. Then we have what we call take profit order. That take profit order is the same thing as, is also an instruction. Remember, I tell you guys, all these market orders are instructions from you to your broker. Tell your broker, this is what you want. This is what you want you want the broker to do. As soon as you activate one, he already know what you want to do. So it's an instruction from you to your broker letting your broker know that once I activate anyone, do this. Once I activate anyone, do this. So it's an instruction. All right. So the next one is what? Take profit. So I've shown you guys how to place an entry. That's instant execution. You just click buy. That means you want to buy at that current price. Then after that, you put your stop loss, activate your stop loss order. That is to protect your capital should the trade go against you. All right? It's an instruction to your broker, telling your broker, take me out of the trade if this trade go against me. Because there are some times you do perform technical analysis, but because of market sentiment, what do we mean? If sellers are more than buyers, all right? If sellers are more than buyers, the price will have to drop. So as if the sellers are pushing the price to the downside, and you have done your analysis and you say it's a buy, that the price is supposed to increase, that means if sellers, if they have upper hand and they decided to push the price a little lower, that means your own analysis will fail that time. That does not mean that you are not a good trader. It just means that at that point, sellers were much and they overpowered buyers. So it's like that. And the way for you to protect your capital against such is to use what we call that stop loss. Once you place your stop loss, you activate your stop loss order after your entry, even if that kind of situation happens, it will just push a little down, then you are out of the trade. As simple as that. So that the next one we talked about, take profit. Your take profit is an instruction given to your broker, telling your broker that you have entered, all right? As soon as I'm making profit, at this point, let me put it here, at this point, take me out of this trade, then bank my profit. You'll be the one to activate it. Once you put your entry here, your stop loss here to protect your capital, if your analysis is right, all right, as the price is going higher, as it's going higher, you are making profit. It's going higher, you are making profit. Because you have identified a particular level, you know that, okay, that is what the next resistance level. What did I say, guys? Resistance level. What is resistance level? Remember, I taught you guys support level and a resistance level. So if you know the answer, please drop it on the comment section. All right. So once you now see, okay, you have entered here, the next resistance level should be where you should put your take profit, because you know, as the price move again from here, as buyers start to push the price higher, it should give you another high price. But should you be targeting that high price? No. The previous high is always referred to as a turning point. All right, because that is a resistance, the current resistance. All right, because the next resistance is not yet established. The one that has been established that we can see, that is physically there, should be your target. That is a place where you should say, okay, once I make profit up to this level, my broker take me out of the trade. I know, based on order flow, that price is supposed to create another higher price than this previous one. But to be on a safe side or a safer side, you need to target the resistance level. The resistance level is a level where sellers will wait for price. And as soon as the price gets there, they will push the price to the downside. All right. A support level is the level where buyers will wait for price. As soon as price gets to that level, they will push the price again to support level. It's just like pushing ball up to the ceiling. Once it touches the ceiling, then the ceiling will push it down. As it touches the floor, if we bounce again, then you go back to ceiling. I'm just using that as an example. So it's like that. Buyers will wait at the support level, they will push the price up, create a new high, a new price. Then sellers will be waiting there. Once they are able to overpower buyer, they will push the price down, lower the price. Because the sellers, they want to push the price down so that they can buy low. As the price is going up, they sell. All right? It's like that. So your take profit is what? Instruction given to your broker, letting your broker know that once I'm in profit and it gets to this resistance level, please bank my profit. And as soon as that is done, you are out of the trade. Even if you are there or you are not there, once you activate that take profit target order, this take profit order, once you activate it, your broker knows that at that price is going to, he or she or the broker will take you out of the trade and keep your profit in your account. Instantly, it's not something, it's just instantly. So it's very clear. Then the next one is buy stop order. Okay. A buy stop order is an order telling your broker, you are telling your broker, it's an instruction to your broker, telling your broker, I know that we are on our trend. The trend is bullish, I know. The price is making higher highs, higher lows, higher highs, higher lows. Now, the price is here, all right? The price is here, I know. But me, I don't want to buy here because I'm sensing danger. Let me push it here. You are now saying, I know that the price is here now, okay? You are telling your broker, I know that the current price here, the current price now as the trend is going up bullish, the current price is here, I can see it. But me, I don't want to buy, I don't want to enter the market at this price. I want to enter the market once it gets to this place. You see, this is the current price. But I don't want to I don't want to buy now. I am placing my own order, giving you an instruction that once the price goes higher and it's at this level, all right, let's say 1.19626, I want to buy here. But the price is here now, 1.19345. I can see that the price is here. I want the price to go above this level, get to this level. I want the price to still push higher, get to this level before you take me into this, before you activate my trade. All you need to do, set your buy stop order like this, put it here, then go to any place you want to go to. Remember, as you are setting your buy stop, remember to also set your, if you know what I'm about to say, please put it at the comment section. All right? Okay. As you are setting your buy stop order, remember to also set your stop loss order so that to protect your capital, and your take profit order, so that at the end of the day, if your order is activated, if price now increase, if price now rise up to this point, trigger your order, your broker will now put you in the market. Then price will now start pushing to the upside. And because price has started pushing to the upside, you are making profit. And where you now put your TP, that is your take profit, anytime you hear the word TP, is take profit. All right. Once you now get to your take profit, your broker will say, okay, yes, he has given instruction that once he makes profit up to this level, bank my profit and take me out of the trade. So a buy stop order is an order given to your instruction that I don't want to buy at the current price. Rather, I want the price to go up again, go up more. Then I will wait for the price around here. Now, the price level that you have chosen, once activated, that buy stop order, once the price gets there, it will activate your order. Then the price will now start pushing to the upside because you have already anticipated that the price is going to go higher. All right? The price is here, but you now put your order here in anticipation that the price will even go higher. You get? So that is a function of buy stop. And it's an order you just set. You go to work. If you still keep your 8 to 5 job, all right, you go to work. Or maybe if you are a full-time trader, once you do your analysis and you set your buy stop order, you can go and be playing game or be doing any other to go to the gym and all that. Once price get to that point, either you are there or not, the order will be activated by your broker and you will be in the trade. And don't forget, as you are setting your buy stop order, please endeavor to put your stop loss order so as to protect your capital, because price can get to this level and sellers will now start pushing the price back to the downside. So if your stop loss order is not there, it will drain your capital. So be warned. Okay, so that is buy stop order. All right. Then another one is sell stop order. Then the reverse. All right. Sell stop order. Let's say, for example, okay, that buy stop order, let me show you on the chart. The price is here. The current price is here. All right. I will say I don't want to enter right now. I want the price to get to this level, this point. I want the price to rise or clear this high, get to this level before my broker, before you put me in the trade. So as soon as you put your order here, your buy stop order, until price get to this level, your order will not be activated. All right. Even if it's 5 days time, maybe price will just be moving around, it will not get to that point. Any day price get to that point, that is the day it will put you in the trade. All right, in anticipation that price will go higher up to this level. So that is how it is. Remember, once you are placing your buy stop, also mark out the place you are supposed to put your stop loss. Very, very important. All right. So let's proceed. Then the next one is what? Sell stop order. The sell stop order is an order you use when the market is bearish, in a bearish market. While the buy stop order is used in a bullish market. Remember, I told you once you set your buy stop order, you are anticipating that the price will still rise. All right, it will go above the current price. So now the sell stop order is like this: price push it to the downside, creates resistance, push below this support and create another support, push to the upside, create a resistance, then push to the downside, creating a support. All right, creating a support. Now, the price is here. This is the current price. It has created a support here. This is the lowest price. You are saying, giving your broker an instruction that I know that this is the lowest price. And what is the price? 1.18925. But I don't want to buy, I don't want to sell now. I want the price to get up to this level, all right, 1.18636. I want price to get to this level before you activate my order, in anticipation that price will rise, price will go down, get to this point, trigger my order, then price should still be going down up to this point. All right? You enter from here. Once your sell stop order is activated, you are anticipating that the price will still go down further. All right? And you want to continue to sell, and your TP, your take profit, will be here. All right? The current price is here, but you don't want to place an order here. You now place your sell stop order here. Your sell stop order here. All right? You now place your sell stop order here in anticipation that the price will come and meet you on the road. Activate your order, then continue going down. Now, at the support level here, this is where you now place your take profit order. Maybe your stop loss order, you now put it here based on your entry, where you put your entry, and the amount of pips that you give your entry. That will be your stop loss. You here will now act as a security to protect any negative move. If price go back, after price has triggered your order, if it's going back, it should get here and take you out of the market. But if you continue going down, once it gets here, it should bank your profit. So that is how it is. So a sell stop order is an order, that you place, all right, in anticipation that the price will move lower than the current lower price. All right? The price will move down. It will still, that sellers will push the price down again than the current lower price. This is the lower price. You put your entry here. That's your sell stop order. You put it here. In anticipation that the price will get to this point, activate your order and continue to push down. All right? I hope I've been able to make it clear. All right, so buy stop, use it when the price is going up. The sell stop, you use it when the price is coming down on a bearish market. The other one is being used on a bullish market. Then the next one is that is the buy limit order and sell limit order. I tell you guys, these are the ones that are all, they are commonly used, but this buy limit order and sell limit order are most or frequently used. And that is the truth. All right. Now, if you are using buy limit order, all right, you are going to be using buy limit order when it's a bullish trend. That means if the price is pushing up, create a price that is a resistance, pull back, create a support, push to the upside, all right? Violating this resistance, creating another high price, price will pull back again, create another support, it will now push again to the upside, creating another resistance, that is another highest price. This is the highest price, all right? This is the highest price. This point is the highest price. But once a scenario like this, you know that this is a bullish market, all right? So now, how do you now apply buy limit order? Okay. Now you know, okay. Remember, I told you guys that as a buyer, you wait at the support level. As a seller, you wait at a resistance level. All right? Okay. So, because it's a buy limit order and price is here, you are a buyer, buy limit order. Now, the price is here. You are saying to yourself, okay, the price is high. I don't want to buy now. The price is high. I don't want to buy now. I want the price to come down so that I can buy low, all right, and sell higher. So you now place your buy limit order here, waiting for price patiently to come to this level. Trigger you in, the price will now start going up to create another highest price. You see? Price was here, all right? He has created, this is the highest price at some point, but you don't want to buy here. You are saying the price is too high. I want the price to come back to a discount level before you now buy, in anticipation that as soon as price gets here, buyers are here to push the price to the upside. It's just like you are waiting, you are a buyer, you are waiting for price to push from a resistance level to a support level. Once that support level holds, that means there are buyers there, plenty buyers with their orders. And what are the orders? The order, one of the order is buy limit order. All right, buy limit order. And some will use instant execution. As price get to that point, they know that, okay, that point is holding. They use instant execution. They enter the market immediately. That is instant execution. They want to buy now, now, now. But you have checked your chart in the morning before going to work, and this is where the price is. All right. You are now saying, okay, based on the structure you are seeing, this is a bullish market. Okay. The order flow, it has created a high. It came down, it broke the high. It broke this resistance and it created another resistance, which is the current high. Then you're now saying price should come to this level based on your analysis before it pushed again to create another high. That is just how to trade. Then you now set your pending order. That is what we call buy limit order. You set it here, all right? Put your stop loss below here and your take profit here. Can you see, guys? This is just how to trade. You wait for price. The price will come quietly, come in here, drop. Once it tap, then buyers will now start pushing the price to the upside. The force they are using is that once price get to this level and price action finds enough orders here, it will tap, activate all the orders that are there, the price will start flying. It will start going up. And once it starts to push to the upside, the idea is that it's going to take out this high. It's going to give us another new high. Just the way this one gave us a high, it pulled back, it pushed, taking out this high, giving us another high. Price will now pull back again, push to the upside, taking out this high, violating this high, giving us another high. Now, the order flow continues until price giving us, if price wants to turn, it will give us what I have already taught you guys, a market shift. All right? Until price gives us a market shift or a change of character before you now change your bias. You know, okay, the order flow has been interrupted. Until that happens, what you need to be looking for is how to buy. And where do you wait for market to buy? Once a high is created like this, you must be patient to see that a pullback has started. And once the pullback has started, you know that, okay, a new high has been formed. Then you just need to wait until price gets to a support level where it will hold. Once it holds and you know that, okay, buyers are there, then it will now start pushing to the upside. And as it starts pushing to the upside, the idea is price will give us a new high. That is just it. So buy limit order is an instruction given to your broker, telling your broker, I am not ready to buy at this current price. I will wait at a discount. I want to buy at a discount price. I want to buy at a lower price than the current price. I think that will, make it simple. I want to buy at a lower price than the current price. But the buy stop order, you want to buy at a higher price than the current price. All right? You want to buy at the higher price than the current price. Why the buy limit order? You want to buy at the lower price than the current price. Then the sell stop order, you want to sell, all right? You want to sell at the lower price than the current price. You want to sell at the lower price than the current price. All right? Then we now have what we call sell limit order. Sell limit order. Sell limit order is used when the market is bearish, when there is a bearish trend, a bearish market. All right? So now this is a resistance, price pullback, create a support, pull back, create a resistance, pull back, pull to the downside, create a support, push again to the upside, create a resistance, push again to the downside, create a support. Now, this is the current price. All right. As a seller, now, what you now need to do, okay, you want a sell limit order. So this sell limit order, you are now saying, okay, you open your chart and you see that this is the current price. You are simply saying that you don't want to buy, you don't want to sell at this current price. You want price to come to this level. You want the price to come to this level. You want the price to go higher. All right. You want to buy, you want to sell at the higher price. You want the price to come up. All right. You want the price to come up. All right. This one is low. The price here is low. You say the price is too low. You want the price to come to increase, to go up again. You want the price to come to a premium level, a premium level. The price to come to a premium level. Remember, when we talk about premium, we're talking about something that has increased in value. Now, you want the price to increase, the price of the assets to increase up to this point. You are waiting for price. Remember, sellers wait for price at a resistance level. Buyers wait for price at a support level. So a seller now, you are saying, okay, I want to go to war because I still keep my job even though I'm a trader, but I've done my analysis. I know that price is here and it is low. Let's say the price is here at let's say $40. Let's say $40. Then you are now say, okay, the other flow price was here, pushed to the downside, created a support, created a resistance, violated this, created another support, pull back, created a resistance, pushed to the downside, violating this support and giving us another support. Then the other flow, price should pull back to this level to give us another price. For example, let price action pull back to this level to give us something like to give us $60. Let price pull back to $60. Then once price pull back to $60, at this price, I want to now sell. I want to now enter the market. I want to enter the market at this price. Because with this price, it's too cheap. I want to enter the market at this price. And once there's increase in price, as soon as it get to this level where you place your sell limit order, the order that you have already given to your broker, it will be activated. Then you will now be in the trade as the trade, because in your analysis and the anticipation is that once the trade gets, once price action get to this point, it should trigger your order, then before it start going down, to create another new low. It should create another new low. It should come and get to this point. So it should come down and give us something like 25. It should come and give us like 25 euro and $25. Let's say $25. It should come and form another low, giving us $25. You see? So a sell limit order is used when a trend is bearish. All right. And what you need to do is for you to wait for price at a resistance level. When the price is going high, then you wait there, place your sell limit order there, price will rise, get to that point, then it will now start dropping to create a new low. So guys, I hope I've been able to dissect this. These are all the orders we have in the market that you need. As a matter of fact, the ones that are majorly used is what I've just mentioned: the buy limit order, sell limit order, and instant execution. All right? Now, stop loss, take profit, sell limit order, buy limit order, instant execution. Those are the ones you'll be using every day. Anytime you want to, you'll be using often. Sell stop order once in a while. Buy stop order once in a while. But I bet you buy limit order, sell limit order, instant execution, stop loss order, take profit are what you really need. All right? So these two, you just need to be aware of it: sell stop order and buy stop order. So on this note, I hope I've been able to dissect everything. I've been able to make it, you see this? Price has turned from here and it's going down. Can you see? This is how it is. You see, it's going down. Can you now see? I've already set my alert here. You see, I said once it breaks above this level, that is when I will get involved in the market, at least to trade up to this high, because I know price will now give us a new high. But you see, it did not. All right? Maybe because of this, what do you call it? This FVG that is here, price is trying to close up the FVG. That is why you see it's pushing to the downside. Maybe once it interact with this level now, it will now trigger because there's another block here. All right? This is the other block. This is the other block. If you have been watching my videos on weekly, my analysis, the analysis that I do every Sunday, you understand what other block is all about. But don't worry, I'm going to still teach you guys. By the time we start teaching, by the time I start teaching you strategy, you grab it. So that means once this push, get to this other block, because this is the other block that caused this push to the upside. So once price gets to this point now, it will now start pushing to the upside. And if it breaks, that means the next point is here. All right? The next point is here. So that is just how to trade. You don't need to kill yourself. That is just how to trade. Let me remove this alarm here. Because now, okay, imagine that let's say if I had entered, if not because of my experience, I say, okay, this is an obstacle. This small point here is an obstacle. Let this guy push above. Once he push above this level, then I know that, okay, it's clear. It can move. And that is the reason why you can always use buy stop order. You just click the buy stop, you see, this is buy stop, buy stop. If I click it here, so that means I've already given instruction to be waiting for the price here. Anytime price get to this level, all right, instead of setting alert, all right, anytime price get to that level, it will take me into the trade. It will trigger the order. then I'll be in the trade. So it's like that. That is one way to use your buy stop order. The price was here, and I will not say, okay, it's here, but I want the price to at least get to this level first before I buy. So it's like that. So as far as I'm concerned, we've been able to deal with this topic in a manner where everybody understand. I bet you, if you watch this video twice and you still did not understand all these market order, please, I want you guys to drop your comments. What do you think about this course as we are progressing? So on that note, I see you guys again on the next episode. Yeah, on the next course, I see you guys again. So thank you very much. I want you guys to share my video, like, comment, all right? And I thank you all. And thank you guys for your support. And God bless you all.